Monday morning. This is World HD streaming live on Rumble, X, and YouTube every weekday, 8 a.m. Eastern Time. Today is Monday, October 13th, 2025. And on Mondays for us, it's Currency Day, and where we focus the show around the global currency markets and what they're telling us. So we'll look at that today. We'll look at crude oil. I want to look at that because of this whole Israel Hamas deal that's going down. And then also we'll look at the stocks because we saw some major action on Friday with the stock market. So we'll take a look at that today. But definitely want to go through the currencies. All right. So hoping you all had a great weekend. In my opinion, this continues to be one of the best falls, late summer, early fall in terms of weather, at least across the Midwest that I've probably ever seen. Just amazing weather. So again, so why does that? I mean, one, it matters is for human enjoyment, but the other part is for the agricultural space. What are going to be the yields this year, the crop yields, as the soybeans start coming out of the ground, the corns? I see it being harvested, right, in Ohio and Indiana, Kentucky. I see a lot of harvesting going on between, the corn, the soybeans, and then I even see winter wheat already being. I thought I saw some winter wheat being planted already, so that's pretty good. I mean, that they've got that in the ground. Sometimes that can get a little sticky getting the winter wheat in the ground. I mean, the thing with the wheat is that it's almost like a weed. So if you get it in the ground and you get it to sprout, before, you go into the cold weather, it's pretty good, usually. It's pretty safe until the spring when it goes through this jointing process. And then that's its only real weak susceptible spot. And then hail, right? That's another thing that can damage any one of the crops. Okay, but great weather. Hope you all had a great weekend. So we approach government shutdown day 13, and it so adds to a lot of the uncertainty that's out there, at least for a lot of people. It hasn't really. That's not what's impacting markets at all. That's what's funny is you would think that most people would think that that has an impact on markets, but it really doesn't seem to be impacting markets all that much. Now, at what point does it start to impact markets? I don't know, we can talk about that, but I would assume this is going to go on for another week or two, and then they'll start getting serious. That would be my guess. We'll see if anything happens this week. This Tuesday, we have Milei in from Argentina into the Oval Office, and then there's a lot going on around this China stuff, and obviously President Trump's in Egypt, actually, this morning or today, to kick off this phase one of this Israel-Hamas peace deal. And we'll talk briefly about that. And then, then Tuesday, that's probably a lot of that's going to be wrapped up tomorrow with Milei from Argentina. And so is there maybe talk of that Wednesday, Thursday, Friday? Are we going to see something around the government's, the House, the Senate, what's going on there? Who knows, right? And then the jobs. I mean, there's so many little things around this that they could get into, the healthcare, we'll let that one go. Let's just give that one a break for today. Let's not dive into that too much on Monday. All right, I want to look at this. Let's go take a look at this. We've got some economic data for the week. I'm going to blow through this pretty quickly today just by doing this. So here's what we have for the week. Let me clear that off there. Okay, so we've got today Trump in the Middle East. We'll get into that a little bit. Last week we kicked off earnings with Delta and a few other earnings. This week, it's going to kick into, and then we had JP Morgan last week too, right? That was good earnings there, solid earnings. A little bit of talk today out of JP Morgan as well, trying to stay relevant in the news from a huge investment of $1.5 trillion. And I'll break that one down here in a second. But anyway, this week we get the Citigroup, Goldman Sachs, JP Morgan, Wells Fargo earnings out on Tuesday. Jerome Powell's out on Tuesday. Tuesday as well, speaking. And then Wednesday, Morgan Stanley. I think there's a conference that day, if I'm not mistaken. But there's also an earnings. Maybe they don't. Anyway, Bank of America, Morgan Stanley, United Airlines earnings out on Wednesday. And then Thursday, supposed to be producer price index and the retail sales. Again, that's going to be dependent upon the data. And does the government get this stuff together? I highly doubt it. I think the big target is the CPI. The CPI is looking like it could come in a lot hotter than people are expecting. So I think I've got some notes on that. I think we'll get into that a little bit when we talk about the dollar. Yeah, I think I've got some notes on that for the dollar. We'll get to that here in a little bit. I don't want to cover it twice. Okay, so let me go back in here. We'll take a look at this. We've got this information or this got this stuff coming out from JP Morgan, and I don't know if I can See if I can throw myself in there. There we go. That seems to work. Let me try this. This ticker's great, but then sometimes it's not great. Okay, let me get that over there. Let's see if that'll work. And now I'm blocked out, of course. Okay, here we go. Throw myself down there. And the ticker's still on. It's crazy. Okay, let me see how I shut this stuff off. Okay. 1, 2, 3, 4. I think this will work. That's all we need to see. Okay. All right, here's what we've got with JP Morgan. So they came out this morning and announced $1.5 trillion going into the U.S. security industries. So the first thing they talked about was supply chain and advanced manufacturing, and this included the critical minerals, pharmaceutical precursors, and robotics. And they also talked about pumping it into 4 areas, right? The second area is defense and aerospace. So this is all these autonomous systems we're seeing, the drones, next-gen connectivity, secure communications, energy independence. This goes along with this whole AI expansion, this massive drive that we're seeing. And I don't know what this means, including battery storage. I'm not really sure. I know what that is, and I know that there's massive battery storage systems for AI data centers because we have a manufacturer near us that makes them, and I actually have a few of their battery backup systems. But I'm not sure what they mean by this, including battery storage. But they're talking about grid resilience and distributed energy. And then on the fourth front here is the frontier and strategic technologies. This is the AI, cybersecurity, and the quantum computing. JP Morgan last week came out and said that they believe that they're about net neutral on the amount of money that they've spent into AI and the amount of benefits that they've received from AI. Now, I talked to a couple people that work for JP Morgan this weekend while I was at a cross country meet, and they're pretty significant in it. One of them's a real estate analyst, and he at times can report directly to Jamie Dimon and his team. So, pretty good analyst. And they were almost not even aware of this, briefly aware of the fact that that JP Morgan thinks that they're finally about break even. Where the amount of money that they've spent in the AI is actually starting to be neutral. And I don't know if they've recovered the cost, but they feel like what they're spending now is, if they're spending $1 billion a year or $2 billion, I think those were the numbers, $1 to $2 billion a year, that they're actually seeing $1 to $2 billion worth of benefits from it. And this is interesting, right? Because this is an internal deal. They have the resources, right? They have the connections to get a pretty good internal AI system in place. They have a reason to do it. Okay, they have the employees who can benefit from it. And so it's kind of a siloed system, right? You can see what they're spending, and then they can measure what they're actually getting out of it. When you go to someone who's an external, like an xAI, or now they're going to use it internally for Tesla, and all their, could be Elon Musk could be using it for his satellites. He could be using it for SpaceX. He could be using it for other things. But this is a very measurable, self-contained situation where it's interesting to see that them saying that they are actually net neutral in terms of expenditures and benefits. When we go to something like OpenAI, it's sort of an island, right? Yeah, I mean, they're generating a lot of great, potentially a great product, but the problem is everyone has to adopt it. So is that a better situation or a worse situation? And I guess what I'm saying here is, it better that this AI is going to fall underneath corporations and be controlled individually, and they control a lot of their own? They take outside data, they use their internal data, and then they generate an AI platform? Or is it going to be better if someone else is generating it? And maybe this is how it's going to get broken up in terms of this AGI, right? Artificial general intelligence, right? There's going to be some kind of an artificial general intelligence out there, and then there's going to be maybe some sort of internal, artificial intelligence that's inside corporations. Because again, a lot of this comes down to the data that it gets fed. So if you're trying to pull something from a data source that isn't relevant to what you're doing, how great can it be? If you're feeding it only your data, then it's really groupthink. You kind of get locked in the space where it's really just, are you really getting that much from it unless you reach outside? So it could be a combination of these things. You've got outside and you've got internal. And so you use the internal for certain things, and then you're also leaning on the external, right, to double check or to generate ideas, externally, right? So you don't get this group think, and you're locked into, some algorithm going wild, making decisions that's based on your own data, creating basically a circular reference. So I don't know how they're going to manage this, right? The eternal problem still comes down to, how are you going to use this, and is it effective, and how are you going to measure it? I think that's the biggest thing. Anytime you're doing this stuff, the real key is, how do you measure it, right? How do you measure your performance? And that's what's interesting about JP Morgan, is that, they are coming out with metrics saying that they believe it's net neutral. So I find that interesting. And then here they are spending 1.5 trillion. Now, when I see this stuff, it's a little bit fishy to me, because I think, could some of this stuff be, it sort of feels sovereign wealth fundy to me, like we've been talking about. We haven't talked about it that much in here, a little bit. We've been working with Aaron Day on this stuff, talk in the technocracy panel with Patrick Wood and Courtney Turner and Aaron Day and myself, and and going through the sovereign wealth fund stuff, right? And this feels a lot like that to me, like it's a bridge between those two. And this everything's feeling technocratic to me, right? Like this technocracy, the technology, the rule by technology is coming into play, using these these surveillance systems, all this kind of stuff. And they're using a lot of a lot of this is being cloaked in security and defense, national security and defense. And that's what we have to make sure we're not getting fooled by, because obviously, we see, Israel and Iran and all the, and the whole Middle East, which I'm going to cover here in a minute. But then we see what's going on we don't actually really see what's going on in Russia and Ukraine and that whole region, because it's not being covered very well. And one day this week, I really hope to dive into that deep and take a good look at what's, because we're starting to we're right on the verge of giving our guidance system and our long range missiles to Ukraine to use, somehow, some way. I don't know who's going to make the determination. And I don't know if it's a threat, right? I don't know if this is just kind of like, you're bluffing, right? Is it a big bluff that we're going to give you Tomahawks, and we're going to give you long range missiles, and we're going to give you the coordinate systems, the coordinate technology to actually drop this wherever they want in Russia, So again, this is on the verge of, a missile crisis again, and it just keeps elevating. And the question is, who's going to okay that? Or is it a big bluff? I don't think it's a bluff, because it's not being covered, number one. If it was a bluff, I think it would be being covered more. So I don't think it's a bluff. I think it's actually realistic. And the problem is, who is going to drive this, and when can this happen? A lot of it comes back to President Trump, and probably the the Department of Defense, otherwise known as the Department of War now. Okay, so I wanted to cover that stuff on JP Morgan. I think more to come on this, I guess, is the thing. I just wanted to introduce this today because it just broke this morning, and it's $1.5 trillion. So it's a lot of money, right, for a bank. And here's the other thing I wanted to mention on this is that, this is a publicly traded company, okay? And this is why it has that sovereign wealth fund feel to it. It's a publicly traded company that is doing, again, making investments in things that can return, and making and lending to companies in these 4 different spaces, right, that they've defined as important. And in the pursuit of supposedly national security and defense, are they going to cross the boundaries of doing what's best for the shareholder? Okay, that's one of the things we always have to watch here. When we get into these conflict type spaces, how much of this crosses the line between, doing what's best for the shareholder and doing what's best for, the technocracy, or what's doing best for, national defense, right? There's kind of 3 different factors here: the technocracy, defense, and shareholders, right? So again, they do all these big circles. If you've ever seen these things, they do these things, and then they do stakeholders. Who are all the stakeholders? Well, I don't think it's worth drawing a diagram. I think that pretty much defines it. Is this in national defense? Is that just where the money's going, and they're just chasing that? So many questions with this stuff, I guess. And that's why, just wanted to introduce it. It's concerning to me. It's also, it's a double-edged sword, good on one side, potentially bad on the other. And that's why we have to monitor this stuff. Okay. And then let me roll onto this. We've got President Trump. Let me see if I don't think I have anything on this one. So President Trump is in Knesset, Egypt, on the first phase of this talking on this first phase of this Israel, Gaza, Hamas ceasefire deal, and phase one of this. And the on the way in, apparently, again, I didn't see the video footage on this, but I heard discussion of it and saw it come through the news wires that the streets were lined with American flag with Israel flags, but every third flag was American. Now I don't know if this was where this is going on, right? But I don't know if this is going into where he's talking, or if this is actually in Israel. Where the point is this, that people in the Middle East are very excited about President Trump and him helping to bring peace, hopefully, in this deal. When Netanyahu's name's mentioned, he's being booed. So this is good, I think. There's risks to this, though, right? And the risks are, let me make sure everything's good here. I'll say good morning. My stuff locked up here on the one thing. All right, there we go. And it looks behind. Okay, so BDG, good morning. Crash and Splash. Trumpet, good morning. David Rocket, rock and roll. BDG, yeah. Beans here in Ohio. Oh, you're in Ohio too. Okay. Our small per bean farmer. Every day I drive by bean fields. Planted late and they're small. Corn is a toss-up. Didn't get much rain here when we needed it. Yeah, and that's the problem, right? So back to what we were talking about, the agriculture. That's a problem with having such a great, weather, is that they weren't getting that much rain. So that you're right. That is the risk of that. So yeah, that could mean yields are down, right, as they go to harvest. So that's what we're watching for. Are yields down? And again, the big Ohio and Kentucky, they're all the whole Midwest is a big growing region. Collectively, what is the overall yield with the corn and the soybeans? That's what we're going to have to wait and see. But yeah, I do agree with that. And the soybeans did brown up pretty quick because of the lack of water this year. Okay. So good to see all you guys in here this morning. And I think everything's coming through okay. All right. Although for some reason my Rumble lags way behind on the output. Okay. Who knows? So that's the thing. President Trump being welcomed, Netanyahu being booed. Okay. And I don't think the world is going to be upset about that. I think that's actually what the world wants to see. And I think that's actually what the world is getting, right? Is the booing of Netanyahu. The other thing is, last week we saw this Nobel Peace Prize. It didn't go to Trump, went to a lady down in Venezuela. I had a story on that. We just ran out of time. But here's what I think is dangerous about this, is that President Trump is being rewarded on a global front, okay, for being this peacemaker. And yet inside the U.S., he's not being recognized for that. And, some of this is ego-based. The question is there an ego with President Trump? Can he keep things separated, or is he going to lean more toward doing things on a global front, which may be what we need anyway with Russia and we're in a very tricky spot. And I think the markets haven't reflected it yet, right? The sell-off on Friday had very little to do with the war front. Okay. It had really to do about a release on China. And that's what I want to spend most of the show on. But I did want to talk about this risk of not being recognized inside the U.S. for peace and being recognized outside the U.S. for peace. If President Trump does, and he does seem to have interest in, being known as the president that's solving all these wars, is he going to be biased? Is his administration going to get biased toward doing more externally than internally? I don't know, but it does raise a red flag when someone doesn't get recognized in their own country for doing this stuff. And I'm even criticizing it too in a lot of ways. So I'm just as guilty as anyone of criticizing this because I'll show you on the charts, right, how I saw this whole Israel thing unfold. We're going to take a look at crude oil today too. All right. And then, so there's two goals of this peace deal, and it's around the return of hostages, which seems to be taking place. So Hamas has freed all the remaining living hostages, which is like 20, right? So we're talking 20 hostages, and what's been a complete massacre. So I'm not sure, to me, this doesn't, that's a good headline. All hostages have been returned. But when you look at the devastation and the people will call it genocide, people will call it, mass killing, whatever you want to call it, we're talking about 20 hostages on this one side. To me, that just doesn't seem proportional, right, at all. Okay. The other goal of this was disarming Hamas, right? Underway. This is underway, right? The disarming of Hamas. We'll see how this goes. That's not an easy task because, again, this whole area is proxy war, proxy war, proxy war, proxy war. Somebody's feeding in drones and weapons and, munitions and, and just cyber stuff, right? I mean, things we don't even think about. All this stuff, this whole region's being fed with stuff out of Russia, out of China, out of India, the US, and we don't even know who's really, it's all proxy wars. And I don't, there are people who are experts on that. I'm not even going to go into that space as to why, who, how, and what the objective is here. What I do know is that this area is, this whole Middle East region was, and we're going to take a look at that. We might as well just do that now. Pull up the chart because that's really what I want to get to with this is taking a look at this crude oil. And I can talk through that as we do this. Okay, so I think we're good on that. All right, let's take a look at this. So this is crude oil. And I want to look at this. So I've got this little pink sliver, okay, up in here. Let me just mark it with a circle just to make sure I draw your attention because it'll get bigger as we broaden this out to a weekly and a daily. So this is that pink sliver right there is where October of 2023, okay? So that is when this whole thing started to unfold with Israel, right? The Israel stand down against Hamas. And at the time, at the time, it's lots of news and it doesn't look good on many fronts, right? Hamas coming into Israel, Israel's been under attack forever. They let them, and you don't know, did they really pull off an attack on Israel? Because that would be a pretty bold move. But then you start thinking about it, right? Then you back away and you start thinking, come on, Israel's like one of them. They have more surveillance than probably anyone in the world, right? They've got more defense systems and they're more aware of their border penetration than probably anybody in the world. And to let this happen, it doesn't make any sense. And then to stand down for 6 to 7 or more hours, right, until they actually put up any kind of a fight back is another layer of red flag. And then, and when you know that they can have helicopters airborne in 5 minutes, and probably to the destination of the attacks on the border within another 5 minutes. So they could probably have a response up in 10 minutes. That's assuming that they didn't even see it coming. Okay. So there's lots of problems there. And then when they don't do anything for 6 to 7 hours, you start wondering like something's going on here. And then we've seen, now it's crystal clear looking back. We can see that they stood down. We can see why. Right? And there's been conflict in that whole region with Israel. And here are the countries that have been involved: Egypt, Libya, Jordan, Iraq, Syria, Iran, Qatar, Yemen. And then obviously, they're attached to Saudi Arabia. So Saudi Arabia has an impact, United Arab Emirates, some impact there. But here's what I want to look at on the charts, right? This is the big thing for me, okay? Here's the monthly, so you can see crude oil, all the way through this is a monthly chart. So this starts back in here in like 1983. And then you can see crude oil mostly goes sideways until about here, 2003. Okay, you get some spikes, right? You get this one, you get Iraq 1 and Iraq 2, you get a couple spikes in the crude oil market, war-based stuff. And then crude oil really breaks out here in like 2003 to 2004. And it makes this run from like 30, somewhere in the $30 range. It's kind of trading between $15 and $30 through that whole period of time. And we know crude oil had gone through issues, right? We know that there were times where there wasn't oil at the gas stations and we'd see big lineups and so forth through that period of time. But then crude oil makes this big breakout and it goes straight up to 150. Okay, and then it comes straight back down, back down to like 35 again. So it retests these highs. So let me just throw something in here real quick. I'll just throw in a trend line just so we've got some reference point. So you can see, these prior highs, okay, in here, maybe not this one so much, but close. This one, this one, this one, okay. Even though this market goes, once it breaks out, it goes straight up, it comes back and it retests that same line. And that's at 33, so basically $34, right? That little purple line that I have going across there. And I'll just darken that up just so we can see it. All right, let me make that bold. All right, I think we're good now. Okay, so now you can see that purple line going across, and you can see it comes back down and kind of retests it there. And it even retests it here, even though this is when crude oil went negative $40 a barrel, right? When President Trump had so much crude oil floating around the world, and it was really mostly due to him, right? There was a lot of supply being built up. He put a lot more supply on the market. I think just to make a point, probably to get the Saudis, you just don't know exactly what was going on there, but you can make a lot of speculation. Nonetheless, crude oil went to negative $40 a barrel. So if you had bathtubs big enough to store crude oil, you could get paid $40 per barrel to store it, to take it, right? They would give it to you essentially. If you went to the futures markets and you locked in, if you bought it at negative $40 a barrel, you would essentially get paid $40, especially once it went up, right? You buy it at negative. I mean, you can't, it's almost like mind boggling how you can buy something like crude oil for negative $40 a barrel, right? You actually get paid $40 to take it because there was no place to put it. Like all the tankers around the world were full and they were just floating around. And there was no place when they went into port to put it because everything was full, right? There was so much crude oil floating around. And this is on the back of all these years of scarcity, right? They're trying to tell us all this, oh, it's scarce. We're running out of crude oil. We're running out of this stuff. And that's not proof, right? Just because you have a big supply glut, of crude oil does not mean that there is, you're not running lower on, you're not seeing diminishing crude oil, right, in the world. Okay, but anyway, keep them with the charts. What I want to really draw our attention to are these two white dashed lines. Okay, so in this pink area back in here, right? So it gives you a little bit of perspective on crude oil. We've got this, support resistance level at $40, support level at $40. Okay, even though it spiked down here, okay, this big spike down, it still hung around there for a while, right? Once it recovered from that, big glut, then it kind of hung around that $40. So I still call this support, even though it blew that away. It was very short-lived, and it hung around there afterwards. Okay, then we go back into this thing where it runs back up to 125. And then we get into this whole, it looks like it's making another breakout here where this pink is at, right? It's at like 90, it's basically on $100, and people start talking about crude oil going higher. And then we get this whole situation with Israel, okay, stand down against Hamas. And everybody think crude oil is going to, they're $150, $300 a barrel, right? All this fear. And it didn't do that, right? We had this harmonic structure that said, if it breaks below these levels, which was like somewhere around the 80s at the time, I think 85 was kind of where the energy zone was at. And the downside objective was 79.37. That's this upper white dashed line, 79.37. Okay, so I'm going to focus in on this here as we go, but I just want to give the perspective. And then let's just do it. Let's just move to that. We can talk about this. Okay, so here's that white dash line, and here's that pink area, okay, where the whole Israel-Hamas thing occurred. And you can see a couple reactions in here, right here, and, maybe here and here, okay, inside, below this 79.37. And then sometime last year, in late 2024, we got this full downside objective of 63.18 in the crude oil. And then the market went sideways for quite some time. I'm going to show you this on the daily. Let's just go to the daily. So the market got down below this. The 63.18 was a target. It got there right around in this area. So it would have been April. So in April of 25, actually, it went down to the 63.18. But the signal must have come in. I think it was right around the turn of the year. It's probably like December, January, February. I can't remember exactly when we got the signal. But a lot of you who were following today probably were following then. And so we get below the 63.18, kept coming back up and retesting it. And we did the same thing on this 79.37 back in here once we broke this. Okay. I think it tested it here. No, it didn't test it there. This was on the invasion of Iran right here. Okay. So we spent a lot of time below the 63.18, and then we get the U.S. going in and taking out the Iranian nuclear facilities. And we get this huge run up, right? Almost to the 79.37. Doesn't quite get there. Comes up just a little bit short, and then back down again. Now, look where we're at. We're back down below this 63.18, and we retested it. Let me see if I can, hopefully I have this on here. Maybe it's this one. We'll let this fill in for just a second. Boy, thought I had this one lined up too. If not, we can just recreate it. But the maybe it's on maybe it's on this screen. Here it is. Okay, this is the one we want. All right, 63.18. So this would have been that spike. This would have been post that spike. Let me just finish up with this one. Okay, we've got this right here. Okay, so we come back down to this 63.18 after the U.S. Again, it creates fear, right? The U.S. goes into Iran, starts taking out nuclear facilities. People are talking about, is this going to escalate? If you would have said, 20 years ago, 10 years ago, 30 years ago, the U.S. is going to invade Iran, you would have thought that that was, and attack Iran, you would have thought that that would have led to a world war, more than likely. Okay, but it didn't. All right. And it hardly had much impact in the stock market. Not only that, crude oil kept going lower after it had that initial spike, right? Because again, the Strait of Hormuz was going to be shut down, right? All these different straits, the Strait of the Mandab Strait, the Bab al Mandab Strait, which is what feeds into that whole region with, United Arab Emirates, Qatar, Kuwait, that whole region in there. Those two straits potentially could have been shut down, right? So now there's fear all over the place. So you get this spike up, and then it dissipates quickly, right? And now, the crude oil is below this 63.18, and it's hanging out below there, all right? And this is the point. This is that same white dashed line down here, the 63.18, okay? And you can see a retest back in here and so forth. So we've been talking about this. As long as it stays below the 63.18, okay, there's a downward pressure in this crude oil market. Now, how does that pair up with what's going on with Israel? And well, we know that whole area is energy, right? Syria, there's pipelines, there's natural gas pipelines. There's a battle over all kinds of stuff that runs through that region, right? The crude oil, the natural gas, the pipelines that run through there, the proxy wars, right? This constant ongoing battle, because it's not really, these aren't as much nation states as they are tribally based. A lot of this Hamas stuff is tribally based, and so it's a different angle on how we look at things. And I guess to me, here's the takeaway is that the whole time, the crude oil market's telling us, what's going on. And why is that? Because it's money, right? It's power, it's influence, okay? It's the influence of that region. And when we hear, do we expect peace out of this region? Things can flare up at any time, but somehow, some way, whatever's going on, this lie that we were told about Israel and Hamas, right? Who knows what really happened with Iran and the bombing of the nuclear facility? Who knows what's really going on with Syria and Assad and Russia and, Assad and Russia. And there's lots of different sides of the story. And we can all sit here and speculate. And people are probably way better at doing that than me. The point is that the crude oil market is telling us that it's whatever they're doing, okay, from a peace perspective and a calmness and economy through energy, whatever they're doing is working, right? Because crude oil keeps drifting lower. And other than the occasional spike because nuclear bombs dropped in Iran nuclear facilities, not nuclear, bombs, B-2 bombs dropped in the nuclear facilities in Iran, okay, to take that stuff out. Other than that spike, this has been a pretty well-behaved market. 79.37 stayed below there. 63.18, it stayed below there. And so that's what the markets are telling me. I don't understand. I can't even imagine. I can't even begin to act like I understand all the factions going on in there. I know that it's energy based. I know that there's a lot of, there's a ton of things that can flare up in that region. Okay. That being said, crude oil is telling us the story, and it's told us the whole time. With the 79.37, when everybody thought crude oil was going to $300 a barrel, right, because of this invasion into Israel, we now know crystal clear looking back, the markets knew that. The crude oil market knew that that was a scam, okay? So the markets can help. My point is this, the markets can help us foil the scams, all right? And so the reason I go through all that is I want to go into the stock market, what happened on Friday today. So I kind of want to keep that in mind, right? There's a big picture perspective on the energy markets. And then let's see if we can't push that forward, right? Sort of reutilize that. It's not the same structure, but there's a similarity there. There's a similarity of trying to figure out what's really going on with our stock market, right? And what happened on Friday. Okay. So let's kind of hang on to that if we can. All right. And then, well, we'll just do it right now. So we've got Trump. All right. So President Trump, let me go to this. We've got, so on Friday, President Trump comes out with this at 10:58 a.m., 10:57. All right. And he comes out and he says, some very strange things are happening in China. They are becoming very hostile and sending letters to countries throughout the world. Probably won't meet with China's President Xi at the ASEAN summit. Okay, so this is this APEC summit. All right, and then he goes through some details in here, about rare earth metals, and all kinds of stuff, right? It would clog markets, and make life difficult for virtually every country in the world, especially. So he goes on and on and on, right? Releases this thing, and why does this matter, right? Well, this matters because you don't do this, right? Scott Bessent is a trader, right? He's worked for Soros. He knows he took down the British pound, right? These guys know how markets work. You don't drop something like this at 10:57, okay, on a Friday as Europe's about to close. Asia's closed, Europe's closing, okay, and only thing left is the U.S. market, right? And I've been saying last week some fishy things were going on in the stock market. We had this really deep overvalued in the markets. Let me see if I can pull that up. We won't show it. It won't show because I've updated this, so it won't show what we were seeing last week. But we were seeing this this deep overvalued. Uh-oh. Okay. Let's see, why am I not able to get this? I want to show you. Oh, I think I know why. Okay, here we go. That's why. All right. So let's take a look at this. I want to go over, I think this is right. Okay, so this is the key. Up at the top, we have the S&P, we have the NASDAQ, and we have some other markets. But all I want to do is light this thing up, okay, with red, okay, and the NASDAQ. And I'm going to leave the NASDAQ undone because all we need to do is look at this S&P. So again, we have a couple columns here, right? We have a short term. This is like an hourly right here. This is a 4-hour. Okay. And I basically turn those off for the show. We don't need to bog ourselves down with that. Here's the daily time frame. Okay. Here's the weekly time frame, this column. And then on the right-hand side is the monthly column. Okay. So we had pretty deep overvalued last week in this daily time frame too. Okay. Meaning red. So up at the top where you see that other red up in here, these three numbers up in here, we had red. Blue is undervalued. Red is overvalued. It's a synthetic sentiment. Okay. So what we're looking at is, we talked about this last week. I think Wednesday, Thursday, maybe even Friday, we talked a little. I think we even talked about it Friday morning about different ways. Someone in here asked the question. It was Geo Rich or I can't remember who it was. Someone asked, what is overvalued, right? And again, it's this thing that you don't know, especially when you're at all-time highs, right? When you're at all-time highs in markets, it's very tough to say, oh, it's overvalued because you have no reference point. Like, compared to what, So then you start getting into fundamentals, price to earnings ratios, price to sales ratios, this to that, that to this to that, right? You could take all these things and you can make a case and you can make a story. That's what analysts do all the time. You can also poll people, right? You can do a polling and you can say, how many people are bullish? How many people are bearish, right? And you get a poll. And when you get to extremes like this, it usually tends to be a contrarian, okay? Usually when 90% plus of people think the market's going higher, as I say in here, a lot of times the last buyers have bought, right? Who else is left to buy? If 90 some or 95% of the people have already bought, are they going to buy more? Are they going to keep buying more? At some point, this is when it gets overdone, right? Things get a little overcooked on the upside. And we had this on the daily, the weekly, and the monthly time frame. So now you can see on this column, okay, this thing was lit up bright red right in here, okay, and now it's not, right? That center column, okay, and now it's not. This move down on Friday burned all that off, okay? And we actually got readings down at 28. So people went from 96% of the people thought this market was going higher, 90 to 95% thought this market were going higher. And now we just because of Friday, it would drop right down to 28, okay? So on a daily time frame. On the weekly, right, it's still high, okay? It hasn't reset. Now, I'm just going to leave it at that, right? The point is, the reason I left these red, okay, we're going to have an update on this, so it's probably going to drop. But I didn't drop the weekly yet because here's the concept. If the weekly and the monthly are going to work out and we are going to see those be overvalued, then what we saw was the daily work. And remember, if you're thinking about waves on waves, right? So let's say you've got this monthly as a big wave. And then the weekly is a smaller wave, right? It's going to move more inside that bigger monthly wave. And then the daily is going to move even more inside the weekly and the monthly, right? You could have multiple times that the daily could get overvalued and then sell off and get overvalued and sell off, all while the top is forming in the weekly and the monthly. Hopefully that makes sense. So we're talking about big waves, medium-sized waves on the weekly, and smaller waves on the daily, right? These choppy little waves, right? If you think in terms of frequencies, you got the big base, big long-term waves like a monthly, and then you get the weekly, and then you get the daily. And what we may have seen is this one-day sell-off, okay, on Friday, came very fast, very furious, and it gets blamed on President Trump. And I think he deserves it. Okay, I think he deserves the blame. And I almost wonder if it wasn't intentional, because they should know better than to do that. Scott Bessent should be in the mix if he's going to, unless President Trump just went off on the cuff and just said, okay, I'm just going to fire this thing off without any connection to my Treasury Secretary or even my Commerce Secretary, Howard Lutnick, or anybody who's got market experience. They would say, dude, you can't drop that at 11 o'clock on a Friday when there's no liquidity, unless they intended for this to happen. Okay, that's the other thing you have to ask yourself. Was this intentional? All right, so hopefully that gives us a little bit of perspective on the overvalued. And then we see this, and let me show you the market, right? Let's go in here and take a look at what happened in the markets. Okay, now we'll look at this. Hopefully this will help. All right, so we're done with the crude oil. Let's go over here and look at the S&P. Okay, so we can use this chart right here. Okay, so what we have is this. Last week we were working pretty hard on this this upward sloping trend channel. We talked about this Elliott wave. Okay, I'm going to slide that in here just so we can talk about this. There we go. On that left underneath me, there's the Elliott wave concept. You got this wave 1 down, you get this corrective phase into 2, and then you get a third wave down. Okay, then you get another corrective wave into 4, and then you get wave down 5. That's the concept behind Elliott wave. Is it perfect? No. Is there something to it? I think so. Okay, I've watched this for a long time. I think there's something to waves of 3s and 5s, right? Waves come in patterns of 3s and patterns of 5s, a lot, okay? And then, and this goes back to Fibonacci and a lot of other things, okay? So, and there's a connection to it. But here's what we were looking at, right, is this idea that this 65.74, the white dashed line, okay, was important on the way up. Now, I've mentioned this, I don't know, probably too many times, but I blew it when we went from the September to the December contract, okay? I was focused on September, scratching my head like, what is going on? Like, why is it not getting there? And I looked at the December, but I wasn't paying close enough attention to it. When we went to the December contract, these 3 yellow circles down here on the white line, it was hitting the upside objective, right? It was hitting the 65.74. The problem is once the contract rolled, we were already through it, okay? We were up in here once we actually got to the December contract. So my mistake. And it cleared up a lot of things, though. So once we got above there, I said, look, this market is strong. It wants to go, right? And you can short it, but just be careful. Know where your risks are, right? And is there a good chance that it's going to come back and retest that 65.74? There is, right? But it's not a guarantee, okay? And until it gets to that point, until we see some signs that this market can come back and retest that 65.74, you have to respect this thing on the upside, because it can go and go and go, especially when you get energy builds like this, right? So this is what was concerning me for a little while. We get this energy build right in here, okay, where the red goes inside the white, and you have strong momentum, okay, and you see it starting to break out on the upside. This market should have probably gone like this in here, right? If it was really strong, it should have pushed up into there, but it didn't. Okay, it started going sideways, and that's when we started watching this upward sloping trend channel with the idea, okay, that, let me see if I can get to that. I think I did it. Did I do it on here? All becomes a blur. What chart we were doing that on? Wasn't there. Was it on this one? No, we can, I'm not sure why I was doing that. Okay, is it worth redoing? Well, I wish I could find that quickly. Yeah, I don't know where it's at. Okay, well, we can, I'm not going to recreate it because it'll take too long. But here's the point. We had this upward sloping trend channel. Okay. Imagine looking at that little thing below me. Okay. We had this Elliott wave. We had a push down. Okay. And we had this great consolidation on the upside. Right. And it looked exactly like that, going from point 1 to point 2 on that little chart below me. And it looked really good. And we said in here, I think it was Thursday, I think it was, this is the spot to short it with the idea we're going to get another wave down. And it didn't happen, right? It blew right through there. But again, the key was we had low risk, okay? And we were going to, and it was a little pink circle on there for those of you who remember. There's a little pink circle we had on there, and we said, look, we've got this prior resistance, prior support. We've got a moving average there. We have this upward sloping trend channel. We have a couple things coming together at that point. If it's going to go down and we're going to get this second wave down, this is the spot. And it didn't happen. It blew right through there. And it just gapped through and it was off to the races. And I think that was Wednesday or Thursday. I can't remember what day it was. And then it starts to top out. Okay. And then it comes back. I think it was on Thursday or Friday. It comes back and it finds that trend channel again, which really shouldn't happen. It shouldn't have, it respected that trend channel way too much. Okay. So that gave me red flags like that trend channel probably should have held when it did. And somebody came in there and drove this market higher, right? To get everybody off sides, right? Pushing it higher so that people panic and the shorts get out, right? They have to buy it back. And maybe even some people come in and they get long because they're afraid. They're at the end of the year. We're coming into the fourth quarter. They're performance chasing. So they need to try to chase performance. Now, it's a lot of stuff to swallow there. Hopefully that's kind of mixing. If not, ask some questions on it. And I'll look in if you have any questions on that concept, I'll try to answer them. But my point is this, once that trend channel started to break, I cannot believe I can't find this because this would be so great to look at. Let me just check this chart. I just have lost it. I don't know. Dang. Okay, well, maybe we'll look at this tomorrow because I do want to look at anyway. It came back up, retested that trend channel, broke below this purple line, this 67, this 6720 area, okay, where this purple line's going across, and this little shaded area, okay, right there, that lighter purple shaded area. Once it broke that, it kind of held, and there was a good chance at that point that if it proceeded lower, okay, that it was going to retest that 65.74. Now, here's the big problem that I want to show is that when President Trump came out and dropped this, this bomb, right, this thing, that at 10:57, right, that China's doing this and China's doing that, and we probably won't meet with them. I mean, this means tariffs. This means, the whole trade thing with China is really falling apart. Okay. So the markets freak out and they start thinking inflation. They start thinking trade deal. They start thinking, it starts thinking all these things, and so it freaks out. But it goes back down to where? 65.74. So it comes back down and it retested. It actually pierced it on Friday at the close. I mean, it was pretty crazy. How can I not find this chart? I can't believe I can't find. I had this chart up all weekend looking at it. I don't know why I can't find it. The point is this, that they shouldn't have done that. President Trump should have known not to do that. They did it. Okay. They did it at the perfect time when Europe's closing. They do it when Asia's closed. They do it when our liquidity is starting to dry up. A lot of people are leaving, right? Friday noon, you know what people do. They're either tuned out or they're gone, a lot of times. And no one's around. Wall Street's clearing out. The hedge funds are starting to head to wherever they go for the weekend, right? They're getting on their helicopters and they're off to their, to their little palaces and wherever they go. And things are, and so then this thing gets dropped. And the question is, was it on purpose? Okay. And then it comes back to 65.74. And then here's the even crazier thing, right? Is then they come back, and I think this was last night. Okay. They come back and they say, oh yeah, no big deal. Let's see. I think this is it. China actions. And so they're walking back, and part of the internal power struggles, more than a coordinated economic. Okay, so perfectly priced markets, blissfully devoid of risk on Thursday and into Friday morning. We're still saying one about China imposing further global restrictions via permits needed by foreign companies, the rare earth exports. So anyway, they start backing off of this thing. And I think I have something else. Let me see here. So then this is out, right? So again, it's back and forth, right? China warns of retaliation. Beijing responds to Trump's tariff threat. Threatening with high tariffs at every turn is not the right way to get along with China. If the U.S. persists in its own course, China will resolutely take corresponding measures to safeguard its legitimate rights and interests. This is from China's Secretary of Commerce of Ministry. And so, it gets stirred up. And I have to believe that this was intentional because, and it was to make a market sell-off. And I don't know who it's directed at. I don't know why they were doing this. Okay. But so far, nothing's broken down. We had the deeply overvalued. Let's back up for a second. Let me back up for a second and just kind of clear our thoughts. We had this. Okay. We had the overvalued on the daily in the S&P. It's now gone. Okay. Why is it gone? because we got that sell off back to 65.74, so we burned off that overvalued, and then we popped last night. The markets didn't even let people buy at the bottom. It just gapped higher, right? It gapped higher. Because why? Because all of a sudden, President Trump's backing off things with China. China's, they're going to still continue to meet at this APEC summit meeting coming up. Everything's things are kind of calming down. And the market just gaps higher on the open last night. And it goes up, goes sideways. Then it starts to trickle off a little bit this morning. It looks like, yeah, it's down a little bit. Because I started selling into it. Once it got up there, I'm like, all right. It almost got back up to the purple, got back up into that purple shaded zone. This is extreme movement, right? I mean, the market's not even open. We still have 30 minutes until the market opens today. And we just saw this sell-off from Friday afternoon when markets really shouldn't be doing much, okay? And we see this huge rally back, okay, when the cash markets aren't even open, okay? And we're seeing all this volatility. And to me, this is a sign of, are they allowing people to get out, right? Are they allowing the big boys to move positions? Because something's not right with this. And I don't think this will be over. I guess that's my point. I think we're going to see more and more of this if, okay, we're going to now work on the weekly, right? If the weekly's now going to show overvalued, okay, then this column, okay, hopefully you can see that one. This column right there, okay, I think I can run it all the way down. That'll help you see it. This one right there, that column, where the red's at up at the top of that column that I've highlighted. If this will be next, right? If it cascades over from the daily to the weekly, this will be next. Okay, so this is what we're thinking, a bigger wave, right? Again, a bigger wave, and is this overvalued going to burn off? And then if that starts to work over the next coming few weeks, 1 to 3 to 6 weeks, something like that, okay, then we're going to be looking at this column, this monthly. What's going on with it? Is it going to go from overvalued to undervalued, or is it just going to come off the boil, right? Because just because it's overvalued doesn't mean it has to go to zero or it has to go to blue, right, and turn blue and go undervalued. It just means that it can go sideways, right? To work this off, the market can go sideways. It can go sideways to down. There's two ways to burn off this overvalued. Sideways, and people just lose their enthusiasm for the market and the sentiment drops. Okay, again, back to that concept of overvalued. We can either look at all these different ratios, we can look at sentiment, and we can look at different things in the price. We can try to take a microscope, look at these markets and look at topping formations and say, is this market topping out, right? And that gives us the indication it's overvalued. And when we see that trend channel that I'll dig up, I'll find it, and we'll look at it again tomorrow, and we'll come back and I'll clean this up and shorten it up. But I think it'll be sometimes good to talk about it, and then I'll come back and do a short version of it tomorrow with that other chart with the trend channel. And we'll go back and reflect on what we were looking at last week, because I think it's a learning opportunity for this daily. Will it cascade into the weekly? Will the weekly cascade into the monthly? And what kind of a time frame are we looking at? And how do we position ourselves for a potential topping formation? Or are we just going to go sideways for a while up here? Okay, because remember, look at these markets, right? Look at this market. I mean, look at this on a weekly time frame, right? I mean, this market's just going and going and going. At some point, it's probably due for, sideways or a down move. Okay. This just isn't normal what's going on with our stock market. And you can look at this in Germany, right? You can look at this in France. You can look at this in Japan. And their economies are falling apart and their stock markets are still going to the moon. Okay. So we have to question, like, what is going on, and are they trying to suck people in, right, for something bigger? Okay. Maybe this technocracy, right? How are you going to go from a debt-based to an asset-based system with tokens, with tokenization? And I know that probably doesn't mean a whole lot at this point, but we're going to get more and more into tokenization and what that means and how they can do this transfer from the world we understand today and we've understood to a world of tokenization where they've basically turned all assets into digital assets, and everything has a QSIP number, some number to it, and this is how we can lose a lot of stuff, or all of our stuff, quickly, is if this technocracy is able to somehow get its arms around all these assets. Okay. And how does it do that? So one down move one day, okay, back to this, one down move one day does not make a guarantee that we're going to tokenization and the technocracy is winning and that it's going to take us down. But I'm just very suspicious about how this whole thing went down. And we have this deeply overvalued, okay? And the question is, what comes next? I don't know, okay? But I do know that there's a good chance we're going to see sideways to down, okay? And what we have to do is be thinking waves, okay? There was a daily wave down. It's going to go, potentially going to go back up, which is what we saw, fast, okay? So fast, people couldn't even participate in it, right? There's been a lot of movement from Friday noon until, Monday morning, 9:30, and not many people have been able to play in that game, okay? You had to go into the weekend basically long this market to participate in that up move. And you had to be sticking around on Friday till 5 o'clock to participate in that down move. Not many people were doing that. A lot of people are on edge. The volatility index is going to climb. Okay, that means we're probably going to get panic and people are going to be putting on options now. Now they're going to be buying insurance because they're freaked out about this and that and everything else. And then that's got it. People's minds they'll forget, and then everything will dissipate, right? The crocodile's sitting in the water, in comes the antelope. It's going to sit there patiently, and then bam, it's going to attack it, That's how things work, right? Something happens, it gets quiet, people forget, and then it happens again. And they say, oh, I should pay attention. And then it happens again, and it happens again. And those are those little waves, right? Leading to the cascade to the weekly wave, leading to the cascade to the monthly wave, okay? So that's what I see happening is how are we going to burn off this weekly? How are we going to burn off that weekly overvalued and that monthly overvalued after we just saw what happened with the daily, okay? And again, small moves so far. Not to this morning, no one's going to be sweating this, right? Market's down a little bit, right? It went down, spiked back up. By noon, everyone's going to forget about Friday's sell-off. They're already the crocodile sitting in the water's calm, right? The antelope is already sticking his toe in the water, ready to come back in. By noon today, I guarantee by noon today, they will have already forgotten about Friday's sell-off, okay? And they'll be on to other things, right? There's going to be other things to talk about, right? And then by Wednesday, Thursday, that will be completely out of their mind, and they'll be on to other things. We can't forget, right? We're looking at these overvalues and how's this going to play out? Are we forming some kind of a top, or at least a sideways progression where you can trade the range, okay? That's how I'm looking at that. Hopefully that's of value to you guys. Let me slide this over here and see what the comments are. Then I want to get into one or two more things today. Okay. All right, so we've got Geo Rich. Okay, TZ, good morning, TZ. I wish people would talk about the 25% of government is shut down and not all of it. Yep, good point. Okay, yeah, okay, Trumpet. Yeah, Craig, that has been my argument all along. Why did they stand down for 6 hours? Okay, great, back to that. Okay, good point, Trumpet. Well, hopefully that makes sense, right? Hopefully that's the thing. Like, you can listen to all these stories and you can get into the geopolitical and you can go back and study thousands of years of history, okay? And the point is, this is my point of trying to do the show, is that the harmonics were telling us all along. The 7937 said something's not right. It's literally not on a papyrus scroll of paper that says, okay, the crude oil market is going to go down and here's how we still have to interpret it, right? But the point is the 7937 told us a lot and the 6318 is telling us a lot, right? And we did crack that into the 50s, right? I think we're down to 58 in crude oil. So again, that concept of short the crude oil is working, right? Short to sideways. So that bear put spread just keep working and working and working, right? And the key is, can you resell this thing and resell this thing? And the natural gas seems to be working. I haven't looked at that yet this morning, but it seems to be working on the long side, right? Same thing with the stock market, right? We're trying to form what's going on. I don't see, people are like, where do you think the market's going to be at the end of the year? I don't know. Like, I have no idea. I mean, I'm day by day, right? Trying to interpret, trying to see how is this overvalued going to burn itself off, right? That's the key. I don't know. But I know where to take low risk spots, right? I mean, I was short that thing from the dead top on Friday. I mean, you guys were in here, right? I said, I'm going to sell more. Right, I'm going to sell more up in here because something's fishy. And once I saw that thing come out from President Trump, I'm like, boom, game on, right? This thing is there's a very good chance we're going down to 65.74, right? So again, I don't know. I don't think anybody knows what's going to happen. Well, one guy knows, right? The point is, I don't think we know, how this is going to happen and how it's going to unfold. But if we read the tea leaves right, you can navigate these markets, right? That's the goal. We're trying to navigate these markets with the harmonics, with the technicals, with the concept of these Elliott wave patterns, with the concept of all these things that seem to be legitimate, right? Did they always work? No. You got to be able to say, hey, I don't think this is working, but that doesn't mean it's garbage and you don't pull it back out at some other time, right? Again, certain things work at certain times, and it's not. It's the aggregation of these things, right? Trying to read what's going on in the news wires, read and calling BS on stuff. Like, I call BS on that. They should not have released that at 10:57 on a Friday. That's just stupid. And I hope that's sinking in with people. That's not good, right? That is not smart behavior. All right, unless you want to see a market crash. Okay, David Rocket, Iran is not part of any agreement. Okay, watch the Strait of Hormuz. Iran has been outmaneuvered. And yet their ideology lives on. They can still cause trouble no matter what. Okay, great. So we got some comments in here on the Middle East. China became more vocal, but there wasn't real policy change last week. Wanted to rain on Trump's peace parade. Yeah, that's probably true. Good point, David Rocket. I mean, you might be right. That might be, because again, it's a proxy war, right? Great point. We don't know who's paying for what in the Middle East, okay? Who's paying for this? Who's paying for this tribal group? What are their agendas? It's almost like a little war inside a war, and I don't know why they do it. I mean, I can imagine why they do it, but they love to do it. I don't know, it's almost like a game, right? It's almost like they're playing chess, you know? And so that's a great point, right? China may have wanted to rain on the parade. Okay, agree with that and posturing before APEC. Okay, David, UAMY is going nuts. We'll have to take a look at that when you keep talking about that one. I think that's the one you keep talking about, GeoRich. I believe they're only smelter and antimony in the U.S. Okay, good. Well, that's great. Well, I'll take a look at that. Let's put that on our watch list. I like that idea. Okay, in Fuego, I'm about to get assigned my $15 covered calls, almost 1,000%. Good for you, GeoRich. Way to nail it. Great S&P discussion. Thank you, Sven. Okay, GeoRich, embrace volatility. Yep. All right. Well, that's good stuff in there. Good for you for getting 1,000% return. That's fantastic. Yay. Good job, GeoRich. Nice job. Excellent work. Okay. All right. So let me keep rolling here. Hopefully that's good. If you have any other questions on that S&P, I'll dust that chart off. I don't know what I did with it. Anyway, we'll come back and take a peek at that tomorrow. Okay. Tomorrow's debt day. I want to get into this. Like, the debt markets are closed today, the U.S. debt markets. Because of this sell-off on Friday, the U.S. 10-year note actually started to make a move. All right. It started to come up off. Let me see if I can show this. Okay. So you can see right over in here. Okay. We've been hugging this red line, this lower trend channel for a long time. The question is this thing going to is it going to finally break out at some point, right? And make a move like this? Well, it would fit with the weekly overvalued on the S&P, the monthly overvalued on the S&P, right? And we saw what it did with just the daily playing out. So if we get more sell-off in this stocks, okay, the U.S. stock market, will that help enable this treasury to go higher? And look, maybe that's why they're doing it, right? Maybe they're so desperate to get this 10-year note down that they almost maybe need to create a stock market crash. There's a lot of different, again, you could say, why would they do that? Why would they do that? Well, to get this 10-year note down. Why? To refinance the debt. You know, assuming that everybody's good and everybody's above board and they're trying to do this stuff for the right reasons, maybe that's the reason, is to get this 10-year note up so we can refinance our debt at lower interest rates, okay? Because we have a lot of it, right? We're probably closer to 38 trillion than we are 37.5 trillion at this point, right? Where I'm sure we're closer to 38 than we are 37. So we just keep adding it like it never stops, right? We just keep running it up. So that never changes. We'll come back and talk about this tomorrow because we see Europe trying to make an adjustment today. But again, the big dog in town is always the U.S. debt market, the 10-year note. It is the dog that wags the debt market tail around the world. I don't know whether that's good or bad, right? Sometimes it can be used in your favor. Sometimes it can be used against you. But we'll come back and talk about that tomorrow. And then what I wanted to look at was one more thing with China. Two more things with China. So again, the APEC summit meeting with President Trump and President Xi is still on. Okay, that's what's giving some relief to the stock market today. We see, we talked about this European debt sell-off, and the question is the rise in yields, right? Or the sell-off in yields, rise in price. And the one thing I wanted to add to this was, I can just blend this right in. So what's been going on in France, okay? And I think I have a little still on this thing. Let me just show you this. So Macron, we got to watch and see what unfolds with this. So Lecornu, who resigned last week, okay, after 27 days of being the prime minister, the sixth prime minister in 2 years, all right, was ready to just walk out the door, and then somehow he got re-engaged. And so now they unveil a brand new French cabinet, okay, and Lecornu is back as prime minister, all right? So, and some people are ticked off at Macron, and I don't know if Lecornu is actually working against Macron or for Macron at this point. Like, I don't know who's working with who and who's working against who. Why does this matter? Because again, France is a big major economy in the world. I think top 5, top 6, something like that. So it's a major economy. It can have an impact. And more importantly, it has an impact on the euro, okay, the European Union. And again, one common currency, all different debt markets, all supposedly different administrations. But again, with the overlord of the EU, von der Leyen. Okay, so major problems with this whole structure. This is what can cause the dollar to rally, okay, and this whole thing to crack. So let's take a look at that. I want to look at this. I think that covers everything. Yeah, that's good enough. That's all we really need to cover on that. So let's take a look at these charts again. And let me pull this up because I do want to go through a couple things on this dollar and a couple other currencies just to give you an idea of, again, looking at different things out there. All right, so here's a dollar on, wait, what was I? I wanted to show something on this. I think it was, maybe it's mostly on this one. Yeah, this will work. And then let's see on the monthly. Let me see if I can show that on here. Monthly. All right, that'll work. Okay, let's do this. All right, so here we go, monthly. All right, so here's a daily on the dollar. Okay, and here's the shorter term. We were looking at this one, right? Our first target was for this dollar to climb above that pink shaded zone. This is a 4-hour chart. Okay, it did that last week. All right, didn't quite break this prior high back in here at this point, but it's getting there, right? Dollar's making some progress. Next, let's look at the daily on this. All right, so again, after we cleared that purple shaded zone on the prior 4-hour chart, the goal was to see if this thing can get up to 100. Okay, that's his big psychological level in the dollar, right? And you can see all these pink boxes I have back in here where it was the floor. Okay, the dollar broke through, looks pretty negative. Can it break through? There's energy built up, right? I've got that blue box down there showing the red going inside the white, so there is energy there. Now, if the dollar is going to fail, it's going to fail somewhere around in here more than likely, okay, up against these standard deviation bands, right? These red and these white lines up in here. So again, right below that 100, if it's going to fail, that's going to be the spot. If it pops through that area, if it gets through these red and white lines right here, let me clear this off there. If it can make its way through this, okay, and actually press on this 100, there's energy there, okay? And it can release on the upside. Where can it release to? Let's say maybe this moving average up in here, all right? That's what the market would be looking at, something like this, right? This black moving average. Let me just draw a couple different fans off of this, okay? So something like this. It could potentially release up into this area, okay? Why does this matter? Because the dollar is so important around the world in so many different ways. It's important for commodities, it's important for metals, it's important for other currencies. And it's so important because from the debt market too, right? This is, if we're talking about inflation, remember, asset inflation, demand inflation, and currency inflation. Currency inflation. Countries can get hosed by currency inflation alone. Okay, that's why the euro, that's why Switzerland was trying to peg to the euro and that peg broke because they wanted to eliminate the currency inflation, right? They wanted to eliminate the fact of currencies going up in Europe and the Swiss franc going down, and they can't sell their goods. Well, if it goes down that way, then they can actually sell their goods easier, right? Because their products are cheaper, right? The European dollar goes further in Switzerland. If the Swiss franc goes up relative to the euro, it's the opposite. People don't, their product is getting more expensive because their currency is going up. All right. Without getting into that too much detail, this is what we're watching. Can this dollar move? It's got the energy on the daily. Okay, let's look at the weekly, right? There's energy there. Can it make a move? Where did my mouse go? Okay, there it is. All right, weekly, let's look at this. So on the weekly, there's energy here too, right? I've got this one marked. Oh, dang. I was just going to change the color on that. Okay, so we've got some energy building up in here. Okay, so there we go. We got that blue box, energy. Again, it's above and below, but I just put it so it's outside the price action. Can this dollar make a move? And it could make a move up to here, right? Up to this red moving average, right? That would not be hard for it to do. And that's at like 102. So this market could push through the daily and into the weekly and still technically be to the downtrend. So again, all these big fund managers are not going to freak out on a move in the dollar to 100 to 102. Okay, so no one's going to freak out, but they will take notice. So, but the key is it back above that 100 technical level? All right, and then let me look at this on the monthly. Okay, so here's the monthly chart, and we've got. I think I wanted to look at this one. No, man, I'm just blowing up today on these charts. I don't know what's going on. Okay, Yeah, well, I don't have that. Anyway, there's an energy build. Yeah, here it is. This will work. So here's an energy build on the monthly, okay? We've got this converging triangle. We talk about that all the time. Talked about that for over a year. And now this thing's holding above 95. That was our key level. Well, that's sort of out of the picture right now because we're looking at 98, maybe a push to 100. Okay, so that 95 is okay, right? Remember, we're hanging by a thread there. And 95 was basically our real line in the sand. That's where we had to really reevaluate this dollar falling apart. And it got down pretty close to it. But you can see that blue, darker blue box down in here. We've got energy build. So there is energy in this monthly too. So we have energy on the daily, energy on the weekly, energy on the monthly. Can the daily cascade into the weekly cascade into the monthly, and we're off to the races with this dollar. Okay, let's look at this Swiss franc. All right, I talk about that a lot. We haven't looked at that in a while. Now this is the Forex. Okay, so we're talking about the Swiss franc coming down relative to the dollar. Okay, so if we're looking at the futures, we're talking about the down market in the Swiss franc. If we're talking about the Forex market, we're talking about the dollar going up relative to the Swiss franc. Okay, so again, it's just what we put over what? Swiss franc over the dollar or the dollar over the Swiss franc, right? It's just, and that creates an inverse. The point here is this. This Swiss franc looks pretty depressed, right? Now, if we look at this on a monthly, my point is this, can it make its way back up to that purple shaded zone? All we're looking for out of the gate is this, right? Our first trade in this whole thing is this. You know, all we're looking for is a retest of this area. Okay, it's proven it can get into this area multiple times. Can it come back up and retest this 84.60 area, right, on the Forex? So this is the dollar to the franc, right? So again, this is going up, futures are going down. Can this thing rally, okay, back up into this area? Right, that's all we're looking for out of the gate. Can it just make a retracement up? And you can see energy starting to build here, right? I've got that blue box down there. Okay, this is on the daily. If we look at the weekly, okay, we've got energy building here too. Okay, right in there. Okay, and then we look at the monthly. Now that we've looked at this one multiple times, and maybe this one's easier. Let me see if this is easier to look at. I don't want to get into the timing cycles on this right now. They don't really apply. Okay, here's the one I really wanted to show. Check this out. We looked at this a bunch of times, but I want to show it again. Okay, this thing is, there's a huge amount of energy being built. This is a monthly chart, so this goes all the way back to early 2017. The energy started to build on this, and it's been building and building and building and building. And usually when that thing releases, you're looking for a big move. So the question is it a move to the downside, which it's looking like it is, right? I mean, the easy thing is, okay, well, the energy is going to release, it's going to go to downside. But if it doesn't, okay, and the dollar actually rallies relative to the Swiss franc, there's a lot of people off sides on this trade, right? And we're talking about potentially a move all the way up into here just to release that energy. Okay, back up to this like 127 area. So you're talking about a pretty significant move. You're talking about 86 cents to the dollar, right? All the way up to, you know, the dollar 127 to the franc, right? So the dollar outperforming the Swiss franc all the way up to 127. Now we're seeing the same thing in the euro. So you can find things in the euro that are short the euro as well. It's the same concept. Swiss franc and the euro are highly correlated. That's why they were pegged for a long time. I think there was one or two more markets I wanted to look at in here. The British pound, let's just look at that because obviously the UK has been in the mix. We'll look at this euro again. We've looked at that many times. It's just the inverse of this dollar, so I don't want to waste our time on that. Let's take a look at this British pound. Here's a monthly chart on the British pound. Okay, you can see the blue energy build again, right? There's energy building on the monthly in this British pound. Where's it going to release? Is it to the downside? Okay, that's the question. This is the futures. We can, again, this is back to the futures market, not the Forex. All right, so we're looking at maybe this turquoise box down in here for a decent extension area, if that works. All right, I'll let that one be at that. We can dig into that one more, but we'll just let it be. Here's the Australian dollar. And I wanted to show this one. This is one thing I did want to show if I can pull this off. Let me see if I can. I had a chart on here. Here it is. Okay. All right, so this will be. This is kind of back to what we were looking at last week with the S&P, okay? Now, look at this thing, all right? We've got that below me, right? We've got that Elliott wave chart again, okay? Look at this area right here from this yellow circle up in here, okay, down into here at the bottom of this trend channel. Let me put another circle down there. Okay. So let me get rid of these other yellow circles. All right, so yellow circle to yellow circle. Okay, That could be wave one down, right? Looking at the little chart below me and then looking at the chart, the bigger chart, right? That could be wave one down, right? Then what do we get? We get this upward sloping consolidation channel, all right? We get an energy build, okay? So this Australian dollar is building energy. Why does this matter? Because again, it's a commodity currency, tends to be paired up with gold and silver, but it also has connections to China, right? Australia provides a lot of raw goods, steel, components that go into steel, okay? This fits into this trade war with China and with Xi and Trump. And what I'm thinking about doing is looking more to this Australian dollar for a trade than I am the stock markets. Because here's what I'm afraid of: is I'm afraid that we're going to get the light switch flipped on and off. The trade deal's on, the trade deal's off. The trade deal's on, the trade deal's off. It's on, it's off. It's on, it's off. And that might be why we're seeing that overvalued in the S&Ps, right? It might go sideways with choppy patterns. And that's how it burns it off, okay? Burns off that weekly and monthly overvalued. It might go down, right? We don't know for sure. That's what we're going to continue to stay on. But the key is this Australian dollar might be a cleaner trade, okay? And it won't maybe be impacted by the on and off, on and off, on and off as much, okay? Maybe it's a dissipated reaction. So it's not as emotional, right? It's more of a true, rational reason for a market moving lower. So the question is this what we're seeing? The first wave down from yellow circle to yellow circle in the Elliott wave, again, looking at the chart below me, looking at the chart on the bigger chart, and then we get this consolidative pattern. Now we're looking for that wave 2 to 0.2 to 0.3, that next wave down, right? The second big wave down from number 2 to number 3. And then what we would expect, some sort of a consolidative pattern for a next wave down to 4 or 5. All right, if we look at this longer, this is on a daily chart. So if we look at this longer, you also see on the weekly, okay, we're sitting on top of a shelf in this Australian dollar. Okay, we've been down here before, right? 1, 2, and what? Right in here as well, 3 times. Okay, we've tested this area. What tends to happen? You start testing a level multiple times. It's like you're chiseling through something. Finally, it cracks. Okay, the question is this the time? And look at the energy build, right? There's a big energy build on this thing too. Okay, all right, right there. It's been going on since February of 24. So over a year, almost 2 years, year and a half, almost 2 years coming up. Big energy build. So again, can this Australian dollar release on the downside? Is this a way to look at China? Okay, because what good currencies are in that region? There aren't any, right? You can't connect the Japanese yen to China. You can't, the Singapore maybe Singapore, Hong Kong dollar. Nope, you can't. These are garbage currencies anymore, right? The Australian dollar is the only legitimate big currency that has a commodity that's that has connections to China. So this might be our play for this whole thing with China. Okay. So that's what I'm looking at on this. Hopefully that makes some sense. I don't know if there's anything else. We hit the franc, we hit the Aussie, we hit the British pound, we hit the dollar, we hit the crude, we hit the stocks. I'll come back and clean up that S&P chart tomorrow for us so we can go back and look at that. The perfect timing of that release, right? The release of this thing is just so concerning to me, right? I don't like when I see this kind of stuff, right? And it's especially when it's coming from our president, right? This I don't like to see at 10:57 on a Friday when there's no liquidity, right? No one can participate. And I don't mind if the institutional guys get hung out to dry because they're big boys and they can handle themselves. And they did. I'm sure they got rattled, right? Friday afternoon with this move. We retested the 65.74. Okay. And so now the question is what's going to happen? Okay. I don't know, but we're going to watch this, right? We're going to watch this evolve. Do we go back down and test? If we come back down and test 65.74, I start to think that this market's getting weak. Okay. If we don't, or we trade how it tests this, let's see what it does if it goes back to 65.74. Let's see. Again, it's our line in the sand, right? This is the place where we can measure. We saw it respected on the way up, even though I blew it, September to December contract, didn't catch it like we should have. Okay, got foiled by that. Didn't realize it till the contract flipped, and then you're like, oh my gosh, how'd I forget that? Anyway, it came back down, tested 65.74, right? Blew through it a little bit, but essentially held it, okay? That's what we want to watch. That's now, it's starting to prove itself, right? It's a residual, it's been hit, but it has residual value, it seems. Let's see what happens with the 65.74. Okay, I think we're good. I think we've hit everything. I'll come back and hit this tomorrow, some of the top strategists. And so we'll see if I can get some clips too. I've got some ideas on some clips that I'd like to run and get my mindset. Because right now I don't even think about clips because I can't run them. I think Rachel and I are going to get together today and see if we can get some clips going again. See if I can get my system set up to start grabbing some of these clips for us, because that would be helpful for all of us. All right, with that, everyone, have a blessed day. We'll catch you tomorrow for Debt Tuesday, and let's see what happens with the markets today. Thanks for joining us, and have a great day.